Oil sliding at this hour. Take a look at this. WTI $86.31, down 18% in the current quarter. After China enforced more COVID lockdowns today, sending a shock to the energy markets with demand fears in the driver's seat. The price of black gold also being pushed lower on an announcement from the White House that the G7 finance chiefs are meeting tomorrow to discuss capping the price of Russian oil to curb President Putin's main source of revenue. And OPEC Plus dropped its latest report that revealed supply is tighter than expected, with only 400,000 barrels a day in surplus as a result of underproduction from several of its members. So with all of this at hand and a possible Iran nuclear deal on the table that would release millions of barrels into circulation from Iran, where do the energy markets go from here? And a Fox Biz exclusive is Lipow Oil Associates president, Andy Lipow. Andy, it's great to see you. And your overall take on the pressure we've seen on the WTI contract. Look, drivers right now, as we're getting ready for Labor Day, are liking this. I don't know about investors, but drivers like it.
Well, certainly the consumer is benefiting from these lower oil and gasoline prices. The national retail average right now is $3.82. I expect that by mid-September, that's going to drop to $3.70. And before Halloween, we're going to get to $3.50 a gallon because there's so much pressure on the oil market due to, as you just mentioned, the COVID lockdowns in China, as well as recession fears in Europe due to the high energy prices.
And also, I mentioned this as we were gearing up to speak with you, what's going on, not just the Iran nuclear deal, but also what's going on in Europe, in particular with Nord Stream and this Gazprom, Russian Europe shutdown. Talk about that, because, the concern for Western Europe is it's going to be not only just a cold winter, but it's going to add to their recession over there.
Right. Well, we've already seen that Nord Stream 2 project completely canceled. And today, Nord Stream 1, which supplies about 1/3 of Russia's supply into Europe, is shut down under the pretense of maintenance. And of course, Russia is using energy as a weapon against the European Union in response to the EU's sanctions on Russia. As a result, we've seen not only natural gas prices spike, but electricity prices spike as well. They're paying in Europe 8 times what we are for natural gas and about 4 to 5 times that for electricity. And you see this translating to lower industrial production. If we were to look at the fertilizer industry, 70% of it is shut down in Europe.
Yeah, well, certainly, yeah, because obviously Ukraine, Russia, major manufacturers of fertilizer. American farmers have been coming onto our air and telling us about that shortage for them, which has been very difficult. What about Iran? Many folks don't think we should go back, and they don't want another Iran nuclear deal. But President Macron of France, he wants it. The U.S. is still on the sidelines of these negotiations. What would it mean to have Iranian oil back into the markets?
Well, first of all, Iran has about 100 million barrels of oil in floating storage on tankers that could be delivered rather quickly, and another estimated 40 million barrels of oil in storage on land. So they really could flood the market quite quickly. And actually, that would benefit consumers to the detriment of Russia, because now Iran would be competing with Russia for those customers in Asia. In addition, we would expect that Iran would be able to increase their production by over 1 million barrels a day over the next couple of months. And once again, that would cut into the supply disruption that we're seeing from Russia at this time.
Andy, real quick before I let you go, I always got to ask you the easy question, but probably the hardest one as well. Oil prices. What's your long-term forecast right now?
Well, I think that oil prices, while they're under pressure today, they are going to drift up because it is a supply issue, and you need these higher prices to simply get more oil out of the ground.
Okay. Well, I remember $40 a barrel, but I also remember $140 a barrel. So somewhere in the middle might be okay. Andy Lipow, it's great to see you, Andy. Thank you.
Thanks for having me.